Let's face it, we cannot talk about marketing challenges without talking about money.
You not believe, but 98% of investors actually invest on entrepreneurs. My objective is to give them that clarity, that visibility, that clear vision, right? What has to be told to investors, and most importantly, what should not be told to investors, right?
What is the strategic blind spot that they fail to see? Usually founders have idea, they do the research about angel funding and VC. Could you please elaborate a little more about alternative investment funds, AIFs?
I said that, see, Indians in India, we make a product when it is viable,
Yes.
right? Please understand, in India we have that Gujju Marwadi mentality, and that's very good. See, ChatGPT is not right now not making money. I hope you know that. Even Elon Musk has said that it's a kind of a pain for Microsoft right now.
Okay.
Because it has not yielded the return the way it should. So believe me, I'm talking this as an investment banker. If you need investment, go for an investment. If you don't need an investment, don't go for an investment. Because Reliance or Adani or Tatas were not built on investment. They were built on vision, very clearly. Right?
Welcome to Another Dimension, the podcast where we try to decode the real challenges that entrepreneurs face in marketing, technologies, business transformation, and growth. I'm your host, Dipanwita Gupta. Today, we'll be talking about a very crucial thing. Business's relationship with marketing starts very early in their journey. And sooner or later, the founder has to face the question of how to fund it. Let's face it, we cannot talk about marketing challenges without talking about money, because many businesses struggle to execute even the best of marketing strategies because of lack of funds, marketing limitations in marketing budgets. Today's guest is someone who will bring clarity to this important cross section of marketing, business growth, and funding. Joining us today is Sandip Kundu, a multicultural senior executive with more than 15 years of experience across business transformation, telecom, if we talk about sectors, telecom, BFSI, real estate, wealth management, and digital transformation. He has deep expertise in strategy management, private equity, operations, change management, turnaround journeys, and financial modeling. He is equally passionate about technology, big data, AI, and he believes that true success is measured not by the wealth we accumulate, but by the change we create in people's lives.
Thanks for calling me on the show.
You're most welcome. So let's dive straight in, and I would like to hear from you. What is your role in an entrepreneurial journey, in a business's journey from, incorporation, inception to scaling up to growth?
It's a very interesting question.
Yeah.
So basically, I help entrepreneurs, in helping in getting them funding. First of all, normally entrepreneurs have their own idea of their own setup, right?
Yeah.
They have their own businesses. But most importantly, I help them to conceptualize it. I help them to create their own stories, right?
That's most important.
Every entrepreneur has its own story, right? And you not believe, but 98% of investors actually invest on entrepreneurs, right? Rather than anything else. So there might be many segments like your operations or your marketing team, or you might have a better strategy, right? Okay. But again, end of the day, when an investor is thinking, he's investing in the founder,
Yeah.
right? So that is the reason it's very important that a founder has to understand that what are the things an investor wants at the end of the day,
Yeah.
right? So basically, my objective is to give them that clarity, that visibility, that clear vision, right? What has to be told to investors, and most importantly, what should not be told to investors, right?
That is so crucial because yes, as founders, we have understanding of our own business, we have our own dream, but how to pitch it in front of investors, that's kind of a make or break thing, right?
Yes.
In the funding journey.
It's a very important thing.
Yes.
So basically, as a human being, you might know that, we have an attention span of around 10 to 15 minutes, not more than that. right? So if you make an investor understand for 15 minutes, and if he asks you for another 1 hour to discuss on your product or your startup, that means he is already glued to your thoughts, right?
True.
So there are some kind of measurement techniques which every entrepreneur can use and understand, and which is very, very important and significant, because all these things helps him to get into the funding zone, right?
Okay.
So I call them, so very important. Every entrepreneur has to understand something called business moat. You might have heard about the word called moat,
Yes.
right? So Warren Buffett had devised this term to understand and conceptualize a business, right? And to understand and conceptualize a business, it's very important that you understand what USP your your
Your
product,
business, yeah, your product
product
has.
is adds, right, or value it's adding. So all these things, when you put it all together in front of an investor, and you put up a perfect pitch, right? Uh, you absolutely, you are able to glue that investor. See, 80% of the products, if you see in the market, there are products which are very, very similar, right?
True, they are just extensions of what has already been there.
Absolutely. So all these extensions, how will you make sure that your product or your startup gets noticed,
Yeah.
right? So here the story has to be made in a way that where not only the metrics which the investor watches, but the story of the founder is in the eyes of the investor. So there's a very interesting saying by Ashwath Damodaran. He says that beauty lies in the eyes of the beholder, right?
Yes.
That's true. Probably somebody might like a D2C startup.
Yeah.
Somebody might like a AI startup. Somebody might talk about blockchain. Somebody like you might like a digital
Digital,
technology
yes,
kind of a
technologies,
startup,
right?
right? So there are different zones, but most importantly is the fact that what is the moat you are talking to an investor again. So all these things, I have been writing a book as well called
Oh,
Hustlers.
that's
I
awesome.
probably come by end of this year or in January. So that book is called Hustlers, right? So we call them hustlers,
Hustlers?
yeah.
Okay.
So
That's very interesting.
yeah. So basically, the objective here is to very crispy way of how to speak about your moat, right? And then there are different metrics, right, which you have to speak about,
Right. We'll come to that metrics because
right?
those are very important.
Right.
What I would like to know is, like, with your experience across telecom, BFSI, and real estate, that as we spoke about, what is the single biggest strategic blind spot, if I may say so, in the early stage Indian startups when they try to scale their business, or maybe at the very early stage of their business? What is the strategic blind spot that they fail to see?
Again, this is a very good question because of the fact that most of the entrepreneurs don't understand the burn rate of a business,
Yeah.
right? So, for example, today you get a $500,000 funding, right? But then you have a lot of things to do. For a founder, he has to develop a team. Uh, a team doesn't come in a very his team is costly, right?
Definitely.
Talent is costly. Plus, you have to have other AI tools to utilize and put it
Software
across.
products, yeah.
Yes, yes. So all these things cannot happen without understanding the burn rate, right? So you will be, $500,000 will be gone, after some time. Then what? If you are not able to achieve that MRR, again the metrics which we will talk again. So this MRR, monthly recurring rate, then what happens is that you are not able to justify the funding in the next round, right?
Okay.
So on the perspective of an investor who has a certain amount of timeline, which is very, very important to get a exit or to look for another round of funding or getting a valuation, right? There are many aspects by an investor, right? So an
Yes.
investor might look into the second round exit. An investor might look into a greater valuation. An investor might look, helping the founder with different strategies,
Right,
right?
right.
So there are different kind of investors, but the most important is how and how you are making the burn rate in your startup
Right.
go in a way where you can actually, after 2-3 years, tell your investors, see, you have invested in me, and this is something I've made a return for you.
Yeah.
So more or less, you look like, you've seen fund managers, right? So they have a target of return, right? So in entrepreneurship also, when you make a startup, you have target return which you have to give to investors.
Absolutely.
Problem is, entrepreneurs are very emotional with their products or startups.
Yeah.
You might have seen the Byju's case,
Yes.
right? It's a very interesting case, because it was one of the most valued edutech in the world. It was the most valued edutech in the world. Can you believe it? India produced the most valued edutech. But what happened? Basically, when the founder understood the burn rate was more than the amount of MRR or ARR being created, he never thought of exiting, right? And I believe that when you are not able to channelize a startup after 5 years or 10 years, you should understand that I have done enough for the startup, and let somebody else run it.
Yes.
Okay.
Yes.
It might, many might.
Welcome to Another Dimension, the podcast where we try to decode the real challenges that entrepreneurs face in marketing, technologies, business transformation, and growth. I'm your host, Dipanwita Gupta. Today, we'll be talking about a very crucial thing. Business's relationship with marketing starts very early in their journey. And sooner or later, the founder has to face the question of how to fund it. Let's face it, we cannot talk about marketing challenges without talking about money, because many businesses struggle to execute even the best of marketing strategies because of lack of funds, marketing limitations in marketing budgets. Today's guest is someone who will bring clarity to this important cross section of marketing, business growth, and funding. Joining us today is Sandip Kundu, a multicultural senior executive with more than 15 years of experience across business transformation.
Disagree with my point as well. But again, as I told you, see, again, end of the
Recently,
day,
another startup called Bharat Agrotech or Bharat Agritech, if I'm not wrong, they also had to shut down because I probably, this managing the burn rate,
right.
that is something they probably couldn't manage properly.
Right.
Yeah.
So these kind of things are very important. Now, talking on perspective of VCP funds, let me tell you what happened before 2013 and what happened after 2013 is the fact that now all the VCP funds get, there's a SEBI valuer or the valuer in the team. So they do company valuation also, right? So all these data every year is audited. Please understand that. Okay. So when it is audited, it is in the perspective of the fund, right? How a entrepreneur has been performing over the year. So, for an entrepreneur to say and to be judged after 3 years, they have to perform, right? And see, this is something. And let me tell you. See, I have spent around a lot of time in AIFs and VC funds. Frankly, AIF and VC funding or angel funding, whatever you say, you have to be very much, have the risk appetite, right? High risk, high return game, right? So either you see, for example, in FD you invest, right? There is some return you will expect, right?
Yes.
In stock market, you can wait for your, levels to come and you can make an exit, right? But in AIF, either it's a 0 or it's multiple of 34. You might have heard about, recently Boat CEO said that, Aman Gupta said that he made money 30x something in some startup he invested, right? So basically, not every startup will work in a portfolio, but in portfolio, if 2 or 3 startups do well, they may manage the whole, structure of the business.
Right.
So
actually, I'm so tempted to ask you about so many things. Like most entrepreneurs, when they pitch, they don't have clarity about exit planning, and will of course ask you about the metrics that they need to keep in mind. But since we are already talking about AIFs and So usually founders have idea, they do the research about angel funding and VC. Could you please elaborate a little more about alternative investment funds, AIFs?
Yeah. So, AIFs came into a category and was recognized very early in 90s. But at that time, the laws were not that strict, and very few players were there, right? Thankfully, SEBI came with a lot of addition to the AIF laws, and now AIF is a kind of a product, right, where people are investing. So it's a private investment tool where we have specific investors, ultra HNI kind. So there is you might have seen not much marketing of AI. So it's a very specific
Exactly.
product for a specific people, right? So SEBI doesn't allow any marketing kind, right? You cannot market, but you can
Okay.
go through channels and help to get investors, right? So there are normally three types of AIF. One is Cat 1, Cat 2, Cat 3. Okay. So Cat 1 category AIF is more into angel funds or normal funds where it's more into equity kind of a structure. Cat 2 has debt plus equity.
Okay.
So you can use, it's a very little more complex than the Cat 1 category.
Okay.
Okay. And Cat 3 is more into, into markets, listed and unlisted securities. Okay. And you can utilize it also for hedge funds, also comes into the Cat 3 category.
Okay.
Now, one interesting thing what SEBI has done is previously SEBI never used to talk to sponsors. So there's a main guy who's the sponsor of the fund. Okay. So for example, I'm running a fund. I am the sponsor. So I will probably structurize the fund, and I am the main general partner of the fund, right? So what SEBI said that now a sponsor has also to contribute.
Okay.
Yeah, so you cannot stay out of the game. You have to put some money yourself if you want money of investors. So it's more or less 2.5% of the AUM, right? Or 5 crore, whichever is lower. This is
All
the
right.
rule of SEBI, right?
Okay.
For Cat 1 and Cat 2 category, right? Apart from that, you can invest more, that is fair, but 2.5% you have to invest, right?
And what kind of businesses, or if I may say so, what are the categories of businesses that can, opt for AIFs, look for AIFs, AIF funding?
Right. So every AIF, one structure in these categories, there is a PPM. Okay, there's a Gita of the all the AIF, right?
Okay.
So it writes down where it will invest, how it will invest, right? So the PPM is the main kind of a book, PDF, which is written and given to SEBI and approved by SEBI, right? Mostly fund managers make it, right? So without the PPM, you cannot, operate a fund. So it can be in any category. For example, you want to put money in real estate, okay? So your PPM will specify this is a real estate fund, and we will be doing, this kind of investment. This is the amount of investments we'll be doing, right? And we expect an IRR of this, right? So this kind of structurization is done in the PPM, right? Okay, and the most important part is once the PPM gets approved, right? It has to be shown to investor also,
All right.
right? Okay, so it's not like you can keep it with yourself. You have to show it to investor as per the SEBI laws. Also, even if you are putting it through a distribution channel, the distributor needs to read the PPM as well, right? So this kind of structurization which SEBI has done has clear, made
Which is
the
which
really
is
good.
really
Yeah.
important, yeah.
You will not believe, Dipanwita, that now SEBI is giving around 5 to 6 licenses every month,
Okay.
right? Okay, so yes, again, people might question that there were a lot of unicorns. Every year we used to hear unicorn, right? So this has reduced, yes, but again,
Due to the stricter regulations and
stricter
structurizations,
regulations.
the number of unicorns have reduced. That's
Reduced.
what you want to say.
One part of the story is, see what happened is, it's not the funds have reduced, right? But what has happened is most of these startups, most of these funds have not been able to deliver the returns as expected. That has happened the last 1 year, right?
I mean, do you think the debacle that Byju's faced has some?
One reason, yes. Not only Byju's, many more startups which Blue Smart, that
Right.
taxi, right?
Yeah, yeah.
Then a lot of startups which went, they didn't make money, right? But at the same time, you have to understand again that this has been not only in India, it has been into Silicon Valley also,
Okay.
right? So I remember one of the presentations of IVCA, it's the Indian Venture Capital Association, where all the funds have a kind of a body, right? It's a private body, right? Like your CII or
Yeah.
right, okay. So I met one person and he asked me that why doesn't India have its own chat GPT? So I remember he's from Singapore. He was an investor and venture capital guy. So I said that see, Indians in India, we make a product when it is viable,
Yes.
right? Please understand, in India we have that Gujju Marwadi mentality, and that's very good mentality if you ask me.
Actually, yeah.
Right? We want to make money every
They
month,
have actually built the backbone of business in
backbone of the
India.
business,
Yeah.
right? So probably Mukesh Ambani might have 10 different portfolios, right? But the most important for him is to make an MRR every month, right? That's how he makes Reliance grow. So Vian is very clear in it, right? India chat GPT will come when it will be made in low cost and give higher return. Till
Yes.
that
As
time,
simple as that.
yeah, as simple as that. See, ChatGPT is not right now not making money. I hope you know that. Even Elon Musk has said that it's a kind of a pain for Microsoft right now.
Okay.
Because it has not yielded the return the way it should. Though in the AI,
India
this
is more right now into AI based or AI driven
the
startups,
AI
AI
driven startups,
adoption of AI
right?
rather than making something like ChatGPT,
Yeah, yeah.
as far as I can
Yeah,
understand. Yeah.
but Indians are more interested in making things like, for example, in your digital sphere. So, how to use these AI agents in digital mobilization to make a product sell into a D2C sphere, how to reach the consumer fast.
Right.
So, these kind of technologies in India, and it's a very cheap cost because
Yeah.
people are making it, right? I believe that again, coming back to the point where I was making that this fear has come and it's temporary, okay, and this will always be there, right? But I believe that we had Sequoia investing a lot of money in India. We had Goldman Sachs report which said that a lot of investment will come to India, right? We have Tiger Global, right?
Yes.
SoftBank, they have invested a lot in India. So, though a lot of questions might arise how much money they make, but they see India as a growth-driven economy where you
That's
cannot
great.
see a 7% plus growth anywhere. They know we have a potential to build startups. We have entrepreneurs below the age of 25, 26
Yeah.
who want to grow this country and who want to develop new products. So all these things have come together, right? This whole ecosystem has come together, है ना? And I see that I asked you, Dipanwita, like 10 years back, probably how many of us have thought about starting our entrepreneurial journey, right?
True.
Now a guy straight from college, 20, 25 years old, is trying to
Taking
develop
that
himself,
risk, yes.
taking that risk. He's
Yes.
not asking for a monthly salary. He's asking to develop a product. He's asking to develop something for people. So these kind of things have changed the whole ecosystem, right?
How do you see the ecosystem, the startup ecosystem of the eastern part of India developing? I mean, we all know. I mean, we have been a slow adapters. I mean, the growth has been slow, but I guess the momentum right now has picked up. What is your opinion? What is your
We're talking about
observation?
startups or VC funds, both. Okay.
Both, if you
Both.
can say, yeah.
So there are two parts of the story right here. In Eastern Zone, if I say about, I take whole the East India, right? So a lot of startups are coming up, right? We have a good number of startups, right? Somebody was, during the last election, somebody was talking about Bihar. So that person didn't knew Bihar has around more than 1,000 plus startups, right? Already
Yes,
operating
yeah.
and they're doing good, right? There is a Jharkhand Angels in Jharkhand, right? And in Kolkata also we have Bengal Business Council, right? So it's not like things in entrepreneurship has stopped. People are thinking beyond, right? People are doing things apart from what they are doing,
Yeah.
right? People are also understanding the need and the demand, right? Which I say is very important for an entrepreneur to understand. So all these things are very important. But having said that, the most important has been the lack of policies, right?
Yes.
So normally every state has its own startup policy. I hope you know that,
Of
right?
course.
And SIDBI also gives a good amount to state government to put money into all these startups, right? We have that government funding from different areas where they give 25 lakhs to
Startups, yeah.
entrepreneurs. But having said that, the problem is the lack of incubators, startup policies, the number which should have been compared to even in UP. I have seen this time. Last time I went to UP, I saw that the entrepreneurs are getting a place office and they're getting some money from government and they have started developing, right, their own projects. But in the eastern zone, it's little
Things are
behind,
still quite unstructured, and
unstructured.
yeah.
But again, the talent is there, absolutely, right? So a lot of startups are coming up, and they are. And the important part, what I liked about the Eastern entrepreneurs is, most of them understand how to get funds, and they love that networking part very well, right?
What about the availability of VCs? I mean, when you talk about the Eastern Zone,
So basically, if you talk about VCs in Eastern India, the
yeah.
problem with VC is funding is, there has been not much knowledge of how to create those funds. First of all, second point is, the problem is also about the structurization, right? Uh, in Eastern Zone, what I have seen is people are more interested in real estate or IT sector, probably a little
Yes.
bit, but they also have not been able to find zones where to invest, right? As I already told you, lack of startup policy and all these have not worked much well. But I believe that since this is the golden age of India, right? I believe that, right? If you ask me, I see Sensex going to 1 lakh. I see most of the economy growing in AIF and VCPE funds, ma'am, very clearly, right?
That's
Why?
great.
Because if somebody is earning money, he will try to diversify,
Diversify its
yeah,
the
his
fund.
investment. Yeah,
Yeah.
absolutely. And as I told you, there's a huge risk, but the return is also very huge,
Yeah.
right? So investors now don't need to be told what VCPE fund is or what is a Cat 1, Cat 2, Cat 3 AI fund. That was there 10 years back. Now they know the data, they know the information. It's all available, right? SEBI also has an exam of NISM, fund manager exam, 10C, 10D, which people can give and understand what is AIF, right? So all these information platforms which are coming up has given an opportunity for people to make new funds, right?
Okay.
So I see a future which will absolutely grow good, but the as I told, most importantly is there has to be a little more from the government side, and entrepreneurs need to come up, right? Plus, they especially the old businesses, they also need to put money in these new
This is very
entrepreneurs,
important.
right?
Yeah, I always feel this. There are established businesses all across Eastern India, especially in Bengal. Very old businesses, well-known businesses. They need to
Come up, absolutely,
come forward as
right,
investors. Yeah,
right.
true. Now, coming back to the story of the founders, and since this is the age of startups, I see most founders chase funding before even building discipline in their operations and financial modeling. What are the top two, three? I mean, you can choose the number yourself. What are the few financial red flags investors catch immediately that founders often overlook?
Yeah, this is again very important for every entrepreneur to know, right? Especially when you have a product which is not yet developed yet, right? So, investors look into many things. It's not just, for example, in initial stage, probably you don't have a healthy MRR, right? Okay, you might not have the growth rate also, right? So, normally investors compare the MRR of the company with the growth rate of the sector, right? And what is the, difference they are creating, okay. But at the same time, the most important part is if you are not doing well in MRR, so are there enough customers or consumers onboarded? That is also very important, right?
Yeah.
So there is one app which came to me recently, which is a date app, right? So what I saw that, even they were not making much MRR, but they were making enough, consumers or clients coming up every month, right?
All right.
And there was a positive buzzword,
Yeah. I
right?
mean, the digital footprint is increasing.
Increasing,
Yeah.
right?
Okay.
As you know it much better, right? So this is the first part they have to see, right? Second part is don't overstate to an investor. Okay, this is the biggest problem with entrepreneurs when they go and sit. I have seen face so many issues. Because as an investment banker, my job is to make sure that to make a entrepreneur understand what an investor wants, right?
Right.
But when he sits in front of an investor, they feel that
Try to inflate things.
yeah, they try to inflate things or overstate things, which is
Okay.
not required at all, because the investor knows very well what is the market size and how you are performing, right? And he is not expecting you to become a superman in a day, right? So he is basically in a very simple mode that what you are doing extra to achieve your goals, right? That is very important. Third most important part is the valuation. When once they get into that hard work of getting the attention and getting an investment, sometimes they stuck in valuation. What valuation? And that most important, the problem is 80-90% of the entrepreneurs are tech guys and they don't understand finance at all, right? So
And there's an obsession with valuation.
there is an amazing, and if you read some recent reports, even SEBI has said that, how is this valuation, and as I told you, now it's getting audited. So they had questioned this whole valuation part, right? Because
Okay.
there were startups getting a 30x valuation, for without any reason. I mean, not many years, like in COVID only, we have seen that,
Right.
right? So the issue is what number then? Question is what number then? So they have to create a valuation sheet. So there are various methods they can use. There's a DCF method, discounted cash flow method, or you can use a multiplier method, right? So there are 3, 4, 5 different methods which you can use. And but end of the day, when you sit in the negotiation table, you have to understand that you cannot get stuck to a number, right? And you have to make that investor come on board as well from the side perspective of a entrepreneur. But at the same time, he has to make sure that there's enough space for everybody in the next round. Please understand, this is a very important thing, right?
Yeah.
So a lot of startups, have 10, 12 people having equity, 1,500 people having equity in one startup. What happens next is an exit becomes difficult, right? And what they have invested like 1 lakh, 2 lakh, 5 lakhs, that's kind of this doesn't work at all, right? You have to understand that what is the primary requirement of your funding, right? And you know believe me, I'm talking this as an investment banker. If you need investment, go for an investment. If you don't need an investment, don't go for an investment, because Reliance or Adani or Tatas were not built on investment. They were built on vision, very clearly, right?
That's a very important thing.
Right.
I mean, nowadays it's a kind of I don't know if I'm technically correct. It's a kind of entrepreneurship or startup status kind of a thing that I'm going for investment, going for funding, raising funds.
Raising funds.
Yeah.
But this is one part of the story. But other part of the story, if you are raising money, then you should have the right clarity, right idea that this is the reason I'm raising investment, because I need an exponential growth. This is the MRR I'm targeting, right? I have to make sure that there can be many factors, right? Like, I want to make sure that my cost of acquisition of a customer, CAC we say. So all these words are now,
CAC,
because
yeah,
CAC and everything
yeah.
is there in, people see idea bars and this whole shows which are coming up. So all these why I want to reduce it, or I want to reduce my burn rate, right? Or there's new thing which I can add and my clients will get, because absolutely you have to, uh, in the past, it was not that kind of a structure which was needed, because there was very few players in the market.
Yeah.
But now you are in a market where a lot of people are there, right?
Yeah.
And you have to make sure that you have that healthy growth, right? And then after that you have to plan your other rounds as well, right?
Okay.
So now founders are doing it, thankfully, and I can see.
And since you mentioned about the rising CAC, cost
Yeah,
of acquisition,
right.
so what kind of frameworks, data-driven frameworks, should founders use to decide whether to invest in brand building, product improvements, or performance marketing? Where should they invest first, or what should be the the sequence of
Right.
investment? Yeah.
So basically, see, always most
Or maybe
importantly,
team building.
or team building, right?
Yes.
So basically, it starts with the process of how the product is getting developed, right? Your brand can never be developed if you don't have a product, right?
Yes.
So product is the most important part, right? If it is in very initial stages, right, we call it MPV, right? So when it's a very initial stages, then it is not very easy to convert it into a full-fledged product.
Sellable.
Yeah, sellable product. So at that time, most of the product goes in team and product development, right? After when it starts selling, you're getting an MRR, then there comes a major part, right, where you are looking for reducing the cost of acquisition of a customer, or you are looking for brand building exercise. You have a marketing team, you have a digital team. But the one thing I feel really bad is, if you see, especially because it relates with you as well,
Yes.
most of these guys don't want to have an inbuilt digital team. Even
Okay.
if you see the big D2C guys,
Yes.
they will be dependent on others for their marketing.
True.
Right? At one stage you are okay.
Okay.
But after certain stage you have to have an inbuilt team who are doing it regularly. Right.
Or at least a fixed digital team. It may not. It may be your in-house, or it may be an outside, a third-party team with whom
Absolutely.
you are closely working
Absolutely.
with a long-term vision.
Long-term vision.
Yeah.
So if you see like a kind of an example of this whole digital process even correlates with brand building. So you might have heard about the Piyush Pandey.
Of course. I mean,
died long,
he is
like
a
few
legend.
few 6 months back. So people used to hire Piyush because of the ideas. And they used to hire only him because he was the one who used to think about the whole brand
Journey.
brand
Yes.
journey, right? So here also in a digital sphere where because you guys actually analyze the consumer, you have a
Yes.
structurization of the consumer, right? You filter the consumer, right? You understand the taste of the consumer. Once it is done, then you have to start putting it across. And this is a process which goes on and on and on till the time you don't hits the MRR, right? Okay. So problem is, people keep on changing things, right, which I have seen a lot of times. And what happens is some other company thought in a different way, and then the company came in and they start thinking a different way, right? And this whole
So the
exercise,
continuity gets disrupted.
continuity gets disrupted.
Yeah. Right.
So what I say, Dipanwita, is the fact that for the entrepreneurs, my whole suggestion is whatever you are doing initially, right? See, success and failure, no one can judge,
Yeah.
right? Okay. Even Elon Musk, when he started initially, he had failed in a lot of things that people don't know, right? He failed, right? But he succeeded in many more things in doing
Yes.
so. And as in an entrepreneurial journey, you will fail. You have to first understand that I will fail, first of all, right? Then I will succeed, right? And that is the reason you have to understand that a specific team A good team, especially digital team, brand team, operational team, will help you go through that journey, right?
Yes.
So I always believe that team is very important initially, right? Entrepreneur vision is taken by the team actually, right? Okay.
This
For
is
a
golden. I mean, yeah,
Yes, absolutely.
team
See,
building.
Tata's, why we like Tata's? It's because that's not because of the vision, but because of the team effort they have done, right? All over the years, right?
So when an investor, I mean, coming into the scene for funding and all, so as you said at the very beginning, so it's the founder on whom they bet,
Yes,
right? That they put their primary bet on. Then it's also the team, right?
right.
So, what are the few things that a founder, that a entrepreneur, while who is looking for fundraising, should include in the business speech? What are the few things that are very crucial for the investor to to get hooked, to get interested? Yeah.
I'll come back to that question, but I want to clarify one thing
Sure,
very.
sure, please.
First, one point is yes, I said that investors, bet on founders.
Yes.
Founders bet on team.
Okay.
Please
Okay.
understand, right? Okay.
Yes.
Investor doesn't know who are the people in the team, right?
Yeah.
But a founder knows very well who are the good people in my team, right?
Yes.
So this is very important that good people stay with you, right? And they can channelize your vision. So it's like what should I say, cause and effect kind of a thing, right? So you have to understand that structure, right? Coming to your question in the business pitch, it's very important. First of all, what problem your company is solving,
Solving.
right? That is the first
First
important part,
important
right?
thing.
Okay. If you're if you are solving same problem, okay with that. Don't worry about it, right? Okay. See, if you have a restaurant in your gully and you have 10 more restaurant, doesn't mean that people will stop making food, right? That's the main objective. But the point is, if you have the same business, then what USP you have? That is more
Yeah.
important, right? Okay. So, and third is the founder journey. See, I tell you, a business pitch or a what we call a startup pitch is like a story. It should be
Yes.
like a story. It should not be like, first page is all about problem, solution, USP. No, it should be a story, right? How the problem arose and how I am solving it. Then what is the USP I am giving it? It should keep the investor hooked for a minute. Okay, oh wow,
Right.
this is something is doing extra, right? Okay, then comes the most important part, which is the business plan, right? Which has to be extracted after the operation team analysis. How the business has to be run through, what is the kind of MRR will come across, right? And how the with the business plan, how the revenue will be analyzed for next 5 years, which will create a valuation.
Right.
So I hope you're understanding the cascading
Yes.
effect, right?
Yes. Yes.
Everything is coming from, right? And the most important thing, entrepreneur should always talk about exit of the investor in his
I was
pitch,
coming to this.
right?
Yeah.
Without talking about an exit, he should not end his pitch. He says, "Sir, I am doing this, and you are an angel investor, or you are in the Series A round. So I plan to do my Series B next round in 3 years or 4 years, or next year. But the most important thing is that I plan to have an MRR of this, right? And this is the MRR I'm targeting. This is the team size I'm targeting. This is the growth I'm targeting. So all this should be in the like a map in the front of the investor. So investor likes that he values my money a lot, right? He's not just taking money, he's valuing my money, and he has a vision, he has a plan, right? I always say to an entrepreneur, make sure that you talk about exit strategies. What is he looking at?
Which is mostly missing in many business speeches.
It's
Yeah.
always missing. I have I have never met any. Seriously, I've never met any entrepreneur who talks about an exit, right? Right. But always believe exit should be there, right? Specifically, once you have clarified what you are going to do, and you should ask investors, sir, these are my exit plans. Where do you think you will look upon, right? Uh, and finally, the most important part is that sometimes, even giving a best pitch, things might not work, right? Uh, it's not like that, something is wrong in your pitch. But the most important part is you should be in touch with the investor. Okay.
Okay. Yeah.
That helps, right? And you should keep on telling
Just
him.
like keeping customers warm,
Yeah.
keeping your investors warm is also a part of, what should I say? It's also part of marketing, right?
It's
I mean,
always part of
yeah, it's
marketing.
a part of marketing, right?
So you'll always like, people coming back, sir, we met last year and we
Just
spoke.
like repeat customers,
Repeat
the
customers.
investors should come back to you. I
Yeah.
mean, to understand from you the growth story, the growth that you have
Right,
shown. Yeah.
absolutely. So they want to, the investors want entrepreneurs to come back to them, right? Okay. See, every entrepreneur becomes an investor after some time. That is there. You might have seen like Kunal Bell, or everybody has their own startup and they do invest in big companies, right? Zeroda's Nikhil Kamath, he puts a lot of money. He's his own VC fund also. So the most important part is you have to be in touch with these guys, right? And you tell them, whenever you put up an event or you put up a target getting completed, you tell them, sir, I see this is the achievement I have done, right? And once that buzz starts flowing, right, they will come back to you for sure, right? That is
Awesome.
for me,
Yeah.
right?
Okay.
That I can ensure, right? Okay.
That's great.
Right.
So, I mean, it has been a wonderful conversation. A lot of nitty gritty that I have been thinking about. I mean, how things work. Now we are at the fag end of the conversation, and I'll end it with a few quick fire, rapid fire questions. Um, the first question is one early mistake every founder should avoid while seeking funding.
Don't overstate, keep it crisp. That's what I say. Don't
Okay,
speak
okay.
much.
A business metric more founders should obsess over.
Mostly MRR. They look into monthly recurring rate. Okay. So one entrepreneur should very, look at that metric whenever he's pushing to investor, right?
Okay.
And there are many more metrics, but MRR, actually, if a healthy MRR, you might have seen in all these shows also,
Yeah.
that hits it like, oh, you are growing 20% every month, right? Okay. So this is something which every entrepreneur has to look upon.
Right. And if I can talk about one book or tool that has shaped your leadership role,
See,
or
I am not
any.
that a voracious reader, but one book which I like is The Art of War, right? It's a book on strategy, though. It's not, but it has leadership qualities, right? And every founder should read it, right? If there are certain places where you will find what kind of strategies you should follow, what kind of situations when your team is not working the way you want it to. So yes, books. There are a lot of books which are there, but I think The Art of War, I have read it many times, right? So it's one of the best books, right? Apart from them, there are a lot of startup books. The Lean Startup is another one,
Yes.
right? But again, as I told you, books, you can't learn entrepreneurship through books
Through
very
books, you
clearly.
have to, I mean,
Yeah,
be there, do that,
yeah.
and learn from your
But
mistakes.
yes,
Yeah.
they give an advice to
Yeah.
you, but tell you what to do and what not to
You
do.
have a reference point. Yeah.
This is a reference point,
Yeah.
kind of reference point, right? Words should be. And I think, as I told you, that entrepreneurs should, read more on research reports rather than books. I will advise them because,
Okay.
for example, there are sector reports, right, which come up through, financial institutions,
Yes.
and you should read that. But you have an idea what is coming up, because the biggest challenge for an entrepreneur is not which is going, which is coming up, right?
True.
Okay. So he has to read all this. And a good part is all these institutions have, these are all available free on internet, so
Right.
you have to go through them. That's it.
And one industry where you think massive disruption is probably coming in the next 3 years.
See, we all know AI is coming up, right? Even the Nvidia CEO has told that 90% of jobs will be gone. So I also agree that point. So the more focus will be on skill sets, right? more channelization of these skill sets into work, into entrepreneurship.
Right.
And yes, AI will disrupt a lot of things, but again, AI will be run by humans, so nothing to worry about, right? About that. So there was a time when people said computers will take our jobs. No, they didn't.
No.
They increased the more intelligence of the human brain, and now we are talking of the same thing about AI. I believe that there will be more growth, right, with AI coming up.
And more newer
More
opportunities will
newer
be
opportunities will
created.
come up, right?
Yeah.
Yes.
Yeah. Thank you, Sandeep, for
Thank you, Dipanwita. That
coming
was a
to my.
nice talking to you.
Yes, it was really a very useful, insightful conversation.
I hope I added value.
Definitely, definitely.
Right.
So, this brings us to the end of this episode. We'll see you very soon. Till then, goodbye.